Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair. And this week's topic, what is a financial advisor? So this week's topic, what is a financial advisor? It's going to be me asking the questions. James is going to be in the hot seat. He's going to be running for his life. I'll pin him down for you. I'll make sure he gives us some solid answers. So we thought we'd cover off, what is a financial advisor? How can they add value? What does the term mean? What do they cost? All of the sort of questions that people ask when they're considering engaging a financial advisor, or they just hear about it in the market or hear us talk about it and don't really know what they do.
Yeah, I think I talk about a lot of different stuff on this podcast, and it's very you're the money man, right? Pretty straightforward. Yeah. There's based on my background and then what I do as an advisor, a lot of different things I help people with. And then whether you decide you want to use our services, or the main thing that I'm an advocate for is that you use a financial advisor, whether it's us or someone else. So hopefully this is helpful in removing the confusion and you knowing what's available.
Yeah, and I think this is sort of part two of the series on what is a mortgage broker and what is a financial advisor. We try not to make it too sales pitchy, although we do have some bias because James is a financial advisor and I am a mortgage broker. But like James says, what we're trying to do here is break down, I guess, maybe the stigma or some of the ambiguity around what we do and how we do it, so that people can approach a mortgage broker or a financial advisor without sort of being hesitant or, am I asking the right questions? So let's kick off. James, I think the financial advisors are a really common term, especially overseas as well. They're sort of engaged a lot by people overseas and maybe not so much in New Zealand. Could you sort of break down what a financial advisor does and maybe specifically, how we operate in New Zealand and what we're sort of looking to do?
Yeah, so the term financial advice is very loosey-goosey. There's lots of different types of advisors. I would argue that some accountants are advisors in terms of business advisory services. A mortgage broker is a financial advisor. They're helping you with your mortgages. You've got investment advisors, insurance advisors. There's Enable Me, which is like a financial coaching type service, which focuses a lot around budgeting. So you've got budgets, you've got other advisors who focus purely on goal setting. And then you've got those like myself, which do kind of everything. So there's different types. So based on your stage of life, how much you're willing to pay, what you need, you might go to one of these particular services or a combination of all of them.
Yeah. And what are some of those, I guess, either stages of life or key indicators that mean that I would go to one of them over another? Let's say someone like, I don't know, maybe Craig's or Forsyth Barr, who purely does investment advice, versus someone like yourself who has a more holistic offering.
Yeah. So we help all clients. I've got clients from their first job all the way to retirement, getting paid a regular income. Forsyth Barr, Craig's, the broking houses, not completely, but a very large percentage of their clients are those in retirement. So I have a lump sum, you pay me a fee, and I give you advice on different shares. That's pretty much the mortgage broker's model. Ours is more geared towards that sort of 30 to 50 demographic. So you're at a stage of life where you're paying down debt and trying to grow your wealth, opposed to, so you're probably, I don't know, anywhere between 20 and 40 years younger than the typical financial advice client. For who we're talking to, there's more complexity, more things going on, opposed to just getting paid a regular income in retirement.
Yeah. Okay. And then, so I guess that complexity that you're talking about there, that probably sounds like you're advising on different products to just your straight, here's a managed fund or an index fund or a portfolio of shares that you're investing in. So as a holistic financial advisor or one who offers a more generalized service, could you just run me through some of the, I guess, the key products that you like to focus on?
Yeah, I instead of the word products, I quite like widget, because widget also implies that it's not necessarily like you're buying something. Sometimes a widget can be, I think, a service. Some people might argue with me. That's how I think about a widget. So So you might come and get parts of this service, you might come and get all of these services. But an idea is, firstly, especially for those that are younger, they might go, I've got my first job, I need to set up a budget, I need someone to keep me accountable around how I manage my money. We've spoken about this a lot on the podcast. The budget is slept on. Having somebody who helps you with structure keeps you accountable. So we help people with budgeting services. We help people around debt repayment. So whether it's kind of credit cards and personal debt, whether it's clearing your mortgage over a period of time, we've got projections and strategies around clearing your debt over a period of time. We give advice around KiwiSaver providers, what contribution you should give, which fund you should be in, life insurance, income protection, investment properties. Is it right for you to buy an investment property? What will the cash flows be in the future? If interest rates go up, will you be okay? Will you be okay if you need to start paying principal repayments? And then we also give advice around, we build our own investment portfolios. So similar to to some extent, a Forsyth Barr or Craig's, we give investment advice, and we outsource our research for our investment advice with blended portfolios of shares in Australia, shares in New Zealand, international share funds, bonds, property, cash, the whole kind of kit and caboodle.
Yeah, you can almost mistake you for being a Kiwi until you say the word Australia, and then you have this sort of Australian drawl halfway through it. No, cool. So looking at, I guess, the different products there, you've got the more traditional shares, equity, that sort of stuff. Some of the more practical advice around the budgeting, debt, repayments, that sort of thing. The risk piece, I think that's a really important point to sort of cover on, which is about those insurances, making sure you're protected and that sort of thing. You mentioned at the top of that, though, some people go to different advisors for different pieces of things. Is that something you'd recommend as well, or?
Completely dependent on what they need. So if you have, say you buy your first home and Michael's your mortgage broker, you might only need to talk about insurance. So we've got some clients that Mike refers me where I'm just talking to them about life insurance or income protection. So you might not need to talk about KiwiSaver. You might not have money to invest because you've got a bunch of debt. You might just need insurance advice. There might be a stage of your life where you just need to go, I've got a lump sum, where should I invest it? You might be like, I don't need any help except for my budget. I'm not good with money. Help me structure it that way. So they're the different needs, and they can fall quite nicely with different stages of life. I've got like a thing around like, oh crap, I'm 50. And that tends to kick a lot of people into gear. Those kind of clients, for example, probably want a little bit of everything. And also they want me to review their insurances. So they've had the same insurances for 20 years when the kids were little. The premiums have gone up every year. And then I do like a whole, all right, do you actually need these levels of insurance? And a lot of the time the answer is no, you can have less insurance now.
Yeah, no, absolutely. And I know we've talked about this on separate podcasts about, perhaps, having your investments with one advisor and your budgeting planning with another one and these sorts of things. And I think my philosophy there is I always like to keep things simple. I know you do as well. So unless you're seeing a real tangible benefit for having things split up, I'm always in the camp of trying to keep things simple with one advisor if it works for you.
Can I just check out one other thing in there, Mike, as well? When it comes to especially like investment portfolios, you will get people give you really good sales pitches around why their investment portfolio is better. The stats show that only about 4% of people outperform the market over the long term. So you can get, there's poorly managed investments out there for sure, but you can get lots of good investment portfolios, investment advice, investment widgets out there. If you're just hunting for a return, you just want a return on your money, and you're not as bothered around the service piece, there's lots of different places you can go to get that. You should be thinking about what's the additional benefit opposed to just a return on a piece of paper.
Yeah, no, absolutely. Okay, so those some of sort of the what you do, the widgets or the products you use to do it, and some of the scenarios that you're looking at with people. But I think it's a really important thing to touch on is around the goal setting, and how that plays into a financial advisor. I know with my clients, I'm always looking at their long-term goals, then coming back to their needs and how do we get them there. But that probably plays into your space more so as well. So how do you work with those goals? What does that look like for your clients?
Yeah, so I look at money as a bunch of fun tokens. Can't take it with you. What do you want it to do for you? So a very common goal is I want financial freedom. I enjoy my work, but I want to know that I don't have to work until 65. Some people, helping their kids into their first home is really important. For some, they do want to retire early, partial retirement, a whole range of different options, upgrading their homes. So I don't start with the widget. The widget's not the right place to start. Because if you say to me, James, where should I invest 100 grand? Well, it depends. What do you want to do with the money? How comfortable are you with it dropping in value? What is your time frame to invest? And when you do invest it, when do you need to take out the money? Like, do you need to take it all out at once? You need to take a little bit out at once. So you can't start with the widget. You've got to start with what do you need your money to do for you? What is your goals? Yeah. And then based off those, it's very easy to link the widgets underneath. So index fund, additional mortgage repayments, KiwiSaver, insurance, all of those things kind of lie under, well, where do you want to go? What does your future look like? What's important to you?
Yeah. And it's like you sort of touched on there. I get that as well. People are like, I've got 5 investment properties. I want number 6. And I'm like, why? Like what is it that you want out of this other investment property that you're not getting out of these 5? It can be something really simple, but it is really important to always ask on that, what do you want out of this investment? And then how do we shape that widget or that product to work backwards and make sure we achieve that goal for you?
And on top of that, Mike, what is the additional risk from making the decision? There is, so say, for example, hypothetically, I set up a financial plan and you're making additional mortgage repayments to be debt-free over the next 5 years. You're regularly contributing into an index fund. You've got your KiwiSaver. You buy an investment property. We're going to get you to buy a second investment property in 5 years, and then you've got your insurance. That's your plan, right?
Yeah.
A lot of people get very fidgety, and they feel like if they're not doing something, they're not getting ahead. A big part of my job is going, no, there's too much risk in doing that. Why do you want to, I had somebody the other day saying, James, I want to buy some gold. James, I want to change KiwiSaver providers when their KiwiSaver provider was doing good returns already. And I'm like, a lot of the time I just go, no, don't do that. Because as humans, we like to always keep moving and keep doing something to feel like we're going ahead. But sometimes consistently doing things for a long period of time, not buying that car in certain cases, not overspending every month. They're a lot of the things I help with as part of the annual review process going forward.
Yeah, cool. So I think another really important thing to touch on here is the cost. So what do you charge? How much is this? Is this white glove golden service? I'm going to be charging you $1,000 an hour. What does that look like?
Yeah, it's probably one of the toughest things around financial advice is the way people charge fees can differ so much. So our model can vary a little bit, but generally the way our model works is we will charge a $1,000 financial plan fee. We will charge $250 for an annual review. And then $1,000 is not going to keep our lights on. It's not going to allow us to pay all the people we need to pay and run a profit as a business. So we get paid by the insurance company, paid by the KiwiSaver provider. If we have an investment portfolio, we charge 0.5% as an ongoing advice fee for the building of the portfolio and the right solutions. So you've got to know and have full, disclosure around the underlying, what kickbacks there are, what commissions are being paid, and then how are you managing those conflicts as well.
Yeah, and how do you manage those conflicts?
It's simply with banks, say with mortgage brokers, it's a little bit, it can sometimes be a little bit more tricky because you can get the money from anywhere, right? With like insurance, for example, we have comparison software that goes, here's the price for each of the 4 insurance companies you work with, and here's the quality of the insurance. So that really allows us to be independent and go, here's the right one for you. When it comes to KiwiSaver, some KiwiSaver providers pay us quite a lot, some pay us not much at all. And the way that we frame those conversations is around, what do you want in a KiwiSaver provider? Are you looking for strong historical returns, being socially responsible? What detailed reporting do you need? And then we have like a matrix which helps us go this one or that one.
Yeah, cool. Okay, so we've covered off the different types, what products and widgets you use, around goals, returns, non-financial and financial, and the cost and that sort of thing. And I think before we wrap it up, I just want to really touch on something that you said midway through this. Well, what you sort of said was, for me, I get a lot of people who turn 50 and it's a kicker, and they think I need to do something, and they come and see you. I just want to sort of focus on a little bit of a different group there. So let's say I'm 23, I'm out of uni, I've got my first job, I'm thinking about a financial advisor, but in my head I'm thinking, I don't have a lot of money, I don't want to waste their time. What would you sort of say to that group of people?
The younger you engage, the more we can help you. So time is by far your biggest asset. So if we can set up a plan where we've got a plan for when you're going to buy your first home, you're regularly contributing to an index fund, you've got, you're with a good KiwiSaver provider, all of those sort of things will pay tenfold over 20, 30 years. The sooner you start, the better off you'll be. In terms of the fees and going, well, I don't have that. I mean, if you don't have that money, that's kind of one of those things. But if you go, that's a lot of money for my situation. Cost is all about the perceived value at the end of it. So if you're able to, I don't know, achieve financial freedom, have another $500,000 in asset by retirement, whatever it might be, is that worth $1,000? Or if you're talking to another advisor, 2,000, or whatever it might be. So the sooner you start, the better off you'll be.
Cool. All right, let's wrap it up there.
Great. Okay. Well, thank you very much for joining us. I hope you found this of value, hearing all about what a financial advisor does and how they can help you. Make sure to give us a subscribe, review us if you're watching this on podcast, and slap us a like. And we'll see you next week.
Cheers.